Forex School Uganda. I am Godfrey. Today I want us to do a quick analysis of the dollar Swiss franc pair. That's the USDCHF currency pair. I'm going to be doing a top-down analysis, breaking down the market structure right from the higher time frames down to the lower time frames to see where price is at right now and where we anticipate it to get to in the next coming few days. If I look at this monthly time frame, we see that price formed resistance here, then formed resistance here upon retest, then retested it here again, and it was as well rejected to the downside. Currently, what we see is that price is in what appears to be like a heads and shoulders formation, which ideally would be a bullish price pattern. But I want us to look into the details and see what exactly is happening in the moment. So we see that price was rejected around this area here as well, rejected here again, and once it was able to break through to the downside, upon retest it was rejected here as well, and rejected a third time here as well. And so this means it's a very strong area of resistance around here, and that's why we are seeing that price, after it went into this area to retest it, it was rejected and it's now moving to the downside. So at the moment we see that the monthly time frame is bearish, and you can see that this last candle closed with a wick to fill, and we see that this present candle that is running pushed up to the upside, came and broke the high of this previous bearish candle and wasn't able to continue up, but was flipped bearish, and it's now trending to the downside, potentially to fill this wick here left behind by the previous monthly candle. Now, there's nothing guaranteed. It's about probabilities. Remember, trading is high-level speculation. All you need is to be very skilled in analyzing the markets and to know where price is likely to get to, so you can have probabilities working good in your favor. Otherwise, apart from that, you would be a gambler. And we are not gamblers. Trading is serious business. And that's why we do this analysis to see what price is at. And we take into consideration both the technical, actually three things: the technicals, the sentimentals, as well as fundamental aspects of the market. So the monthly, as it stands now, it is bearish. So we'll drop to the weekly time frame to see what it has to tell us. What we are seeing on the weekly time frame is that price is ranging between these highs and these lows down here, and we see that price kept making a series of higher highs and higher lows, a higher high, a higher low, and a higher high. But when it came into this area and made a higher low, it wasn't able to make a new higher high as it was doing originally. Why? The only reason is because it came into this very strong area of resistance, and so it wasn't able to make a new higher high. And from then on, what we are seeing is price now begin to make a series of this is a low, this is a high, and now this is a new lower low, a low that is lower than the previous low. And so it is now making lower lows and lower highs as opposed to the higher lows and higher highs that it was making prior. And now we see that at present it has just completed making a new lower high. Now, when price is making higher highs and higher lows, the market is trending to the upside. But when it's making lower highs and lower lows, it is trending to the downside. Also notice that price moved impulsively into this resistance area before it started retracing to the downside. And when it was making this move, there's a structure that we see, a pattern form within this market phase, and that's what we know as the M formation. You will see that this was an impulsive move to the upside. When price got here, it started retracing to the downside. wasn't able to continue to the downside. Once it came into this support area, it was rejected and it moved up again to this resistance area, from where it was rejected again, leaving what we know, or forming what we know as a double top formation. And so it dropped to the downside to this point here, where it tested this support area and it was rejected. There's something I want you to notice, that when price came into this resistance area, it was moving impulsively to the upside. But once it touched this resistance area, it was strongly rejected to the downside with this strong bearish momentum candle. And once it dropped to this area here, it encountered this support area. It was rejected from it, and then it pushed back up to the upside, but it wasn't able to continue and break through the resistance area. What happened instead, it formed what we know as a double top formation. From this resistance area, it was rejected down to the downside, and once it came to this area here, it encountered this support area. In fact, we could pull it to the left and you see that it was right from here. So it encountered this support area and it was rejected, and upon rejection it moved back again, retracing to retest this neckline right here. And so when you look closely, you realize that it formed what is known as the M pattern, or the M formation, and then it retraced to retest the neckline to complete the M formation. And also, while it was completing the M formation, it was also completing the corrective phase of the previous impulsive move. And this is what I'm talking about. This was an impulsive move to the downside, followed by this correction. And after a correction, during an impulsive move to the downside, what do we expect? We expect another impulsive move to the downside to complete the impulse correction, impulse formation in the market. Now, based on that, we take it as also another confluence that the market is currently bearish, and so we could see price drop further down to come and retest again this support area here. But we look to see what will happen, or we look to see what will happen as the days unfold. And so the current perspective of the market, or the bias of the market as far as a weekly time frame is concerned, is also bearish, just as it is with the monthly time frame. So we'll drop down further to the daily time frame to see what the daily time frame has to tell us as well. So this is the daily time frame. Now looking at this daily, there's something that I want you to notice. If we bring our trend line and draw it from this high here down, following the trail of price as it was moving to the downside, we see that price was rejected at this point here, came again to this point, it was rejected, came again once again to this point here, and it was rejected to the downside. And every time we see price touch this trend line here, it is pushed to the downside. And so we expect this to be no different with price, especially after touching this area here, that the same way it kept on being pushed to the downside every time it touched it, that it will do the same this time round. Now remember, we are not trying to predict the market, we're only forecasting. We do analysis and then we anticipate where price is going to get to and we forecast it. But the market will do what the market wants to do. All you're after is having the highest probabilities in your favor, and that's why you do such an analysis to make sure that all confluences are lining up in your favor, so you can take an informed decision, and in such a way you're not gambling. Also, something I want you to notice is that price, after coming into this area here, it started forming what appears to be a series of lower highs and lower lows. And so this is a new low that was formed, and this is a new high as well that was formed, a high that is lower than this high here, which makes it a lower high in the sense that this high is lower than this high. And now we see that the market is forming a lower low. a lower low in the sense that this low right here is lower than the previous low. So like we have said before, when the market is making series of lower highs and lower lows, it is in a downtrend. The fact that it is in a downtrend, we expect more bearish bias to continue in this USD-CHF currency pair. Also, the other thing to notice is that there was a support area that was formed here, and when price was breaking through to the downside, after it did such, it retraced to come into it, and we see that it's currently being rejected to the downside. And so as a trader, what you could do is drop to the lower time frames and look for your entry opportunities to ride this market as it drops to the downside. And so the best thing to do is to go to the 4-hour time frame for those that do the swing style, or you could drop down further to the 1 hour for those that do day trading, and those that like scalping, you could draw down to either the 30 minutes or the 15 minutes and take those early entries to capture moves to the downside according to this higher time frame perspective that we've seen, that gives us the bearish bias in the market concerning the USD CHF.